Will China collapse in coming years? Would it bear the danger? What Cathie Wood predicted about China? China has experienced more growth than any other nation on the globe. It has grown into a financial powerhouse during the past 20 years, but if I told you that China's real growth was a hoax, would you trust me? Cathie Wood, CEO of ARK Invest, said that. Let's get into the video. Hello there guys, welcome back to the channel and greetings. Today's video will discuss China's collapse, so be sure to stay focused. What will the global impact of China's coming downfall be? Unquestionably, China's growth has accelerated. However, most of it has come from real estate developers who are growing their businesses and using borrowed money to construct luxury homes, condos, and apartments to saturate the cities. Prospects frequently purchase real estate with the sole intention of reselling it for a profit and assuming that annual increases in property values are rapid. The country's population growth is also attributed to this idea, but they weren't prepared for the unexpected change. Most people can no longer afford to buy apartments or homes in cities like Beijing and Shanghai due to the yearly growth in property values. The smart choice is to get a more affordable home close to China or within 10 to 15 miles of it. Building developers further erected homes because they anticipated this growth would continue. The astonishing fact is that despite the abundance of delicate and sophisticated residences, many of them are abandoned and turned into ghost towns. One of them is a well-known ghost town called the Ordos, which was formerly said to be the home to 1 million people, but later saw its population drop to just 100,000 in 2016, before rising again when prestigious colleges began to occupy the area, filling the vacant properties. These occurrences are nevertheless commonplace, living in a sizable area that is empty. China's real estate market is worth more than $50 trillion following 20 years of growth. It is over 4 times the GDP of China and twice that of the US. Investment firms estimate that real estate makes up 70% of China's overall wealth, although buying a single property with savings is not unheard of in China. Unfortunately, the cost of these properties exceeds the buyer's income, making it impossible for them to be purchased. It is making them rely on a mortgage to pay for housing. It is made worse by growing real estate values, which breed a fear of losing out and eventually push people into dangerous debt levels. 4 of the 10 most expensive cities in the world to buy a property are in China. This degree of thankfulness is alarming and won't stay forever. This scenario occurred during the 2008 American recession, which is currently happening again. The real estate market is being slowed down by its continued expansion at the expense of rising prices, leaving these developers with unmanageable debt levels. The Evergrande developer is one illustration of this. Evergrande, one of the biggest developers in the world, has increased the value of its real estate by selling corporate bonds to foreign investors. With a 565 million square meter broad development land area, Evergrande could stay in the game thanks to its unique access to finance after borrowing more than $300 billion. In 2018, Evergrande was ranked as the world's most valuable real estate company. However, as investors realize Evergrande failed to pay $260 million in interest to credit agencies, this recognition will quickly evaporate. As a result of the company's debt dilemma, this problem has caused a recent decline in the price of the company's bonds. The directive of China's President Xi Jinping adds to the company's inevitable decline as it attempts to lessen property dependence. Its international bondholders have threatened legal action. The action jeopardized the economy's health and made many developers operate in standard mode. Chinese property developers are currently steadily collapsing. For instance, the developer of Oceanwide Holdings missed a $1 million loan payment, and the developer of Shimao recently missed a $101 million interest payment. In the last quarter of 2021, 484 companies are behind on at least 3 commercial revenues, according to a recent exchange. The ongoing financial crisis is worsening, and Chinese real estate and property developers are fully aware that this is not the ideal time to invest. According to Cathie Wood, the top 100 real estate development companies' contract sales fell by 35% in December 2021. For the first time in more than 20 years, development companies experienced a decline in sales. The Federal Reserve is confident that the downturn will hurt the U.S. economy and has noted China's government and local debt as a critical issue. Though many analysts regard China's rapid GDP growth as optimistic, a sizable portion of that expansion is in jeopardy because of the enormous debt bubble that has spread throughout the country's economy and real estate. Chinese household debt has increased at a startling rate compared to GDP over the past 2 decades, outpacing income and combined family income growth rates. China's growth is evident despite its debt issue reaching a point where the country's overall debt as a proportion of GDP is comparable to that of industrialized nations, and its debt balance is rising even faster. Consider economic giants like China, whose GDP is around the same depth as industrialized nations. Stretching too far will unavoidably have a significant impact. The government's tree redline policy, which it implemented in the property sector, indicates the threshold for the amount real estate developers can borrow. The Federal Reserve also discussed increased real estate valuation and how this valuation could crash down due to the Chinese Communist Party's crackdown. It is appropriate to adopt an access policy, but the government ought to have done so many years ago. The three standards are a liability to asset ratio of less than 70%, a net detriment to capital ratio of less than 100, and a cash current liability ratio of 1. Companies that cross these thresholds are permitted to raise their debt levels by 5%. When the red line is reached every year, Cathie Wood likens the CPP's approach to playing with fire to reduce the entire real estate market to ashes. Getting the developers to the bottom will be challenging now that they are overloaded. The top 30 developers in China cross at least one of the three red lines by 2/3. The problem with the three lines is that real estate developers must first sell the property to pay off their loan, which prevents them from doing so. Evergrande and Kaiser Group, two real estate developers, are quickly selling off their assets. Still, because those properties haven't yet been sold, the business is having trouble covering the interest on its loans. Accordingly, Kaiser Group Holding has 18 projects totaling 4.7 million square feet in the market. Because all developers are working together to fulfill the necessary 3 dates, there aren't any purchasers for these properties that are now on the market. Coupled with the steadily declining prices, there is no doubt that the market will soon collapse. Evergrande announced a 30% discount on all of its properties to generate a return on investment, but despite the sum being alluring, customers still couldn't afford it. For many years, analysts hailed China for its rapidly expanding GDP, but given what happened to Evergrande, it is likely that China will suffer. After all, what if China's GDP collapsed? It is possible, since the world depends on Chinese manufacturing, which accounts for 29% of China's total economic output. China's issues may affect the world economy. China produces nearly all goods, accounting for 28% of the world's manufacturing output in 2019. It may sound cliché that China won't fall, but this is nothing we haven't seen before. Although it happened decades ago, China's crisis is comparable to Japan's real estate crash. Because of its booming economy and praise as a role model, nobody ever considered Japan's demise. Some experts even predict that Japan will overtake the US as the world's most influential power. According to Cathie, China's economy will experience a significant slowdown over the next 3 to 6 months. As a result, the market is likely to emphasize the possibility of a U.S. economic recession, the significant slowdown in China and other emerging markets, and any unexpected increases in interest rates. That's all we have for you today. Take a look at how you can predict China's situations. If you enjoyed this video, give it a thumbs up. If you don't want to miss any future videos, subscribe to the channel and switch on notifications. First and foremost, what do you think about the condition of China, and what do you predict for its future?